All right, strap in, everyone, because today we're going deep into Home Depot's latest financial report. And this one,
This one's special.
yeah, this one was a special request
That's right.
from one of our listeners. So
Shout out.
big shout out to you.
Yeah.
We're going right to the source, their Form 8K,
The raw data.
and press release to see what we can find.
No filter.
So let's jump right in.
Do it.
Home Depot sales are up, but their comparable sales are down.
Interesting.
What's the big deal with that?
Well, it's like this. You see their overall sales, those jumped up a solid 6.6%.
6.6%.
To a total of $40.2 billion for Q3 of 2024.
Billion.
That's billion with a B.
Wow.
But a big chunk of that increase is because of new stores opening up.
Oh, so more stores, more sales.
Exactly. And also their acquisition of SRS.
Okay, so new stores and acquisitions are boosting the overall sales.
Right. But now we have to look at how their existing stores are doing.
The comparable sales.
You got it. We're comparing apples to apples here. Same stores this year versus last year.
Makes sense.
And those comparable sales,
Yeah.
those actually dipped by 1.3%.
1.3%. That's 2 quarters in a row now, right?
It is. And that's what makes it so interesting.
What's the story there?
Well, it makes you wonder what's going on at the heart of their business.
Yeah, I mean, people always need to fix things around the house.
Exactly. Home improvement, that's not going anywhere.
So is this a sign of trouble or is something else going on?
Well, let's dig deeper into these numbers and get some context.
Okay, so we've got the $40.2 billion in sales. That's a 6.6% increase year over year. But those comparable sales are down, so that growth might be a little misleading.
It might be, and this is where things get even more interesting.
Oh, lay it on me.
Home Depot actually exceeded expectations for Q3.
Really?
They did, but they also lowered their sales projections for the year.
So beating expectations in the short term, but being more cautious about the long term?
Exactly. It seems like they're acknowledging that the economic landscape is shifting.
Yeah, all those things. Inflation, interest rates. It's got to be making people think twice about spending.
Absolutely. And it can have a big impact on consumer confidence.
So how is Home Depot addressing all this? What's their CEO saying?
Well, Ted Decker, he's the CEO, he didn't shy away from the whole economic uncertainty thing.
I bet.
He specifically pointed to macroeconomic uncertainty, but he also highlighted some positives.
Like what?
He said they were seeing better engagement with seasonal goods now that the weather's more normal.
Okay, so acknowledging the external pressures, but also some internal bright spots.
You got it. It kind of suggests that consumers are being more careful with their spending.
They're still buying, but they're being picky about what they buy.
Right. Maybe they're putting off big renovations, but still grabbing those seasonal items or doing smaller projects.
Interesting. So given this mixed bag of performance and the whole economic question mark, what does their updated guidance tell us about the rest of 2024?
Well, they're still projecting total sales to increase about 4%.
4%.
But, and this is important,
Yeah.
that includes a bump from their acquisition of SRS and also from the fact that 2024...
Wait, go back. 2024 has something special about it, right?
It does. 2024 has 53 weeks.
53 weeks. Is that even allowed?
It is. It's a quirk of the calendar, happens every few years.
Okay.
So that extra week, that's going to add about $2.3 billion in sales.
Wow. Just from an extra week.
And then SRS, that acquisition, that's expected to bring in a whopping $6.4 billion.
So a big chunk of their projected growth is coming from these special circumstances.
Exactly, not from their existing stores.
Which makes those comparable sales even more important.
You got it. And here's the kicker for that standard 52-week period.
Yeah.
They're actually projecting a 2.5% decline in comparable sales.
So even with the extra week and the acquisition, they're expecting things to soften a bit.
That's right.
Okay, so we're seeing a trend here. New stores and acquisitions are driving overall sales, but their core business is signaling a more cautious consumer.
That's the picture we're getting.
And that leads to the big question. How will all those economic factors we talked about, inflation, interest rates, how will those play out and affect Home Depot in the coming months?
It's the million-dollar question.
All right, before we address that, let's look at some other key figures from their financial statements.
Okay.
Anything jump out at you?
Well, customer transactions, those are down slightly.
How much?
Just 0.2% for the quarter.
0.2%? That doesn't seem like a lot.
It's not huge, but it is a trend worth noting.
Okay.
And then the average ticket price, that also edged down
By how much?
0.8%.
So fewer people coming in and spending a bit less when they do.
Exactly. It fits with that whole cautious consumer idea.
Okay, anything else we need to pay attention to?
One more thing, their inventory levels.
What about them?
They've actually gone up compared to last year.
So they're expecting a slowdown, but they've got more inventory.
It seems counterintuitive, right?
Yeah.
Could be a few reasons for that. Maybe they're anticipating supply chain issues or future price increases.
So getting ahead of the game?
Maybe.
Yeah.
But it also could be a sign that they're having trouble selling what they've already got.
Interesting. So a potential warning sign or a smart move?
It's definitely something to keep an eye on.
It is, and it just goes to show why it's so important to really understand these numbers.
They're more than just numbers, they're clues
Clues to what?
to a company's strategy and what's happening in the bigger market.
This is great. I feel like we're getting a real insider's view here.
That's what we aim for.
But before we wrap up part 1 of this deep dive, let's do a quick recap for our listeners.
Okay, good idea.
So what have we learned?
We've learned that Home Depot is dealing with a changing economic environment.
They're navigating those choppy waters.
They are. And while acquisitions and new stores are boosting those overall sales, their comparable sales, which are a key indicator of their core business, those are down.
And their guidance suggests that trend might continue.
Even with that boost from the 53-week year.
And their new acquisition.
Exactly.
And then those other little details we found in their financials, that slight dip in customer transactions.
And the average ticket price.
And that interesting increase in inventory.
Right. It's all connected.
It's like putting together a puzzle.
It is.
And now we've given our listeners all the pieces.
They have the information to make their own judgments about what these trends mean for Home Depot.
And for the wider retail world.
Exactly.
This is awesome. We've covered a lot of ground already, but there's more to come.
Much more.
So stay tuned for part 2 of our Home Depot deep dive, where we'll zoom out and look at what this all means for the economy as a whole.
We'll see you there. Okay, so we just spent some time really digging into Home Depot's performance.
We did, all those numbers and trends.
Right, but now let's zoom out a bit.
Zoom out.
And see how this all connects to the bigger picture, the economy as a whole.
Okay, I'm intrigued. What kind of connections are we talking about?
Well, Home Depot, they're often seen as a bellwether for the economy.
A bellwether, like they ring the bell when things are changing.
Exactly. They give us clues about broader trends.
Makes sense.
Especially when it comes to things like consumer spending and the housing market.
Okay.
So when they report slowing comparable sales 2 quarters in a row, and then they project further declines,
Yeah.
that's a sign that we need to pay attention to.
Because it's not just about Home Depot, it's about what it tells us about everyone else.
Exactly. If people are being more careful about spending on home improvement, it could be a sign that they're tightening their belts in general.
That makes sense. People are worried about inflation, the economy in general.
Right, and that could have ripple effects. It could spread to other areas of retail.
So what does this mean for businesses beyond just, hammers and nails?
Well, it means that businesses across the board might need to adjust their strategies.
Adjust their strategies?
Well, they need to adapt to a more cautious consumer.
Okay, so how do they do that?
Well, think about things like pricing strategies,
Oh.
inventory management, even their marketing campaigns. If people are being more careful with their money,
Yeah.
businesses need to really showcase value, appeal to those changing needs.
So basically, businesses need to pay attention to what's happening with companies like Home Depot.
Absolutely. And adjust their own plans accordingly.
Stay ahead of the curve.
Exactly.
Now, remember that bump in Home Depot's inventory we talked about earlier?
Yeah, that was an interesting one.
Could that also be connected to these broader economic trends?
It could be. You see, a buildup of inventory can sometimes be an early warning sign
A warning sign for what?
for an economic slowdown.
Why is that?
Well, imagine businesses are seeing demand drop, but they haven't adjusted their production yet.
They keep making stuff even though people aren't buying as much?
Right, and they end up with a surplus of goods just sitting around.
So that increase in Home Depot's inventory could be a sign that they're bracing for a slowdown.
It's possible. Of course, there could be other explanations, too.
Like what?
Supply chain problems. Maybe they're strategically stockpiling certain items.
Okay, so it's not a sure thing, but it's something to keep in mind.
Definitely a data point worth watching.
So we've talked about how Home Depot's performance might be a sign of things to come for the economy.
Right, like a canary in a coal mine.
What else can we learn from this?
I think it highlights how important it is to look beyond the headlines.
Don't just skim the surface.
Exactly. It's easy to get caught up in the big numbers, like overall sales growth.
But we need to look deeper.
Right. We need to consider things like comparable sales, inventory levels, management's guidance.
All those details.
That's how we get the full picture.
So it's all about critical thinking, not taking things at face value.
Exactly. Flexing that analytical muscle.
This is giving me a lot to think about, and I want to circle back to something the CEO said. He mentioned macroeconomic uncertainty. What do you think he meant by that?
He's probably talking about all those factors that are contributing to this feeling of unease,
Yeah, it's like a bunch of things all mixed together.
right? You've got inflation that's still sticking around,
Interest rates are going up.
supply chains are still messed up.
And then there's all the geopolitical stuff going on in the world.
It's a lot to deal with.
And it makes it hard to predict what's going to happen next.
Absolutely. The future is always uncertain, but it's even more uncertain now.
So we've explored how Home Depot's performance might reflect broader economic trends.
Right.
But what about their specific industry? What does this tell us about home improvement?
Well, it could be a sign that the whole sector is cooling off a bit.
Cooling off, what do you mean?
Well, think about what usually drives home improvement spending.
Okay,
A strong housing market,
okay.
low interest rates,
Uh-huh.
and high consumer confidence when those things are all working together.
People feel good about spending money on their homes.
Right. They take out loans, do big renovations,
But when those factors weaken,
like they are now.
people get a little hesitant.
Exactly. Higher interest rates make borrowing more expensive.
Yeah, that makes sense.
Economic uncertainty makes people think twice about big purchases.
And if the housing market cools down,
People are less likely to invest in renovations.
so Home Depot's performance might be telling us that the whole home improvement industry is going through some changes.
It's adjusting to a new reality.
And other businesses in the sector, they need to pay attention to this.
Absolutely. Contractors, suppliers, manufacturers, they all need to adjust their plans.
It's amazing how much we can learn from just one company's financial reports.
It is. It shows how interconnected everything is.
What happens in one place affects everything else.
Exactly.
So we've covered a lot of ground in this part of our deep dive. Before we move on to the final part, let's do a quick recap for our listener.
Okay, good idea.
So what have we talked about?
We've explored how Home Depot's performance could be a sign of broader economic trends.
Especially those declining comparable sales,
Right, and we talked about how that might mean consumers are getting more cautious.
and how that could impact the whole retail sector.
We also talked about the importance of looking at all the data, not just the headlines.
And we connected all of this to the current economic climate, inflation, interest rates, the housing market.
It's a complex picture, but we're starting to get a clearer view.
I'm ready for the final part. What's next?
Well, now we're going to shift our focus to the future.
The future.
What might all these trends mean for Home Depot?
For the home improvement industry,
And for the economy as a whole? Get ready.
because things are about to get really interesting. Okay, so we've gone through Home Depot's financials, talked about the broader economy, and now
Now for the fun part,
for the fun part, right? The future.
the crystal ball.
Yeah. What's next for Home Depot?
Lots of questions.
What are some of the big ones we should be thinking about?
Well, how are they going to handle this slowdown in home improvement spending? You know, their guidance suggests those comparable sales are going to keep dipping.
Yeah, what can they actually do about that?
Well, they can't just keep opening new stores forever.
Right, they need a plan to grow those existing stores.
Exactly. Maybe they'll go after new types of customers,
Oh, interesting.
or focus on different products and services, or maybe get more aggressive on pricing. Who knows?
And what about those big economic factors, inflation, interest rates, all that? How's that going to play out?
Yeah, if inflation keeps going up and interest rates keep rising, people are going to keep putting off those big projects.
Especially the ones they don't absolutely need right now.
Exactly. And a cooler housing market,
Yeah,
that could mean fewer people even thinking about renovations.
it's all connected.
It is. But on the other hand, if inflation chills out and interest rates stabilize,
The other side of the coin,
then we might see a rebound in consumer confidence and spending.
which would be good news for Home Depot.
Absolutely.
Yeah.
But predicting the future, that's always a tricky business.
It is. Remember the CEO mentioned something about seasonal goods doing better?
Oh, yeah, as the weather normalized.
Yeah. Could that be a sign of things to come?
It's possible. It seems like people are still willing to spend on home improvement, especially when it's tied to a particular season or a need.
So maybe Home Depot could really lean into that, focus on those seasonal needs.
Exactly. Targeted marketing, promotions around holidays and stuff like that.
Smart. Play into those natural cycles.
Right. Tap into those pockets of demand even when things are a little shaky overall.
Okay, so we've talked about how Home Depot might adapt, but what about their competitors?
Oh, that's a good question. I think we could see some real competition heating up.
Like a battle for customers?
Exactly. Everyone fighting for a smaller piece of the pie could lead to more competitive pricing.
Okay.
maybe some cool new products coming out,
Ooh, innovation.
and maybe even some companies merging together.
Wow, so the whole landscape could change.
It could. And you know what? For consumers, that might not be a bad thing.
How so?
Well, more choices, better deals, maybe some really innovative new stuff comes out.
I like the sound of that. So before we wrap up this deep dive, I want to leave our listeners with a question.
Okay, shoot.
Given everything we've learned about Home Depot, how do you think this all reflects broader economic trends, and what does it mean for other businesses, not just in home improvement, but in retail overall?
That's a great question to end on. There's no easy answer, but, using those critical thinking skills we've been talking about,
Yeah.
I think our listeners can come to their own conclusions, and that's the point of this whole thing.
It's not just about learning the facts, it's about learning how to think about them.
Exactly. Analyze them, interpret them, and then use them to make smart decisions.
And who knows, maybe our listeners will come up with insights we haven't even considered.
There's always more to learn, that's for sure.
Well, on that note, we've come to the end of our Home Depot deep dive. We've covered a lot of ground today.
We have, from financial statements to the future of the economy.
It's been a great journey, and I hope our listeners feel ready to do some exploring of their own.
Absolutely. Go out there, do your research, see what you can find.
We encourage you to dive deeper into any of the details we discuss. There's always something new to discover. So until next time, stay curious.